All right, folks, joining me now, Gav Call Research, Chief U.S. Economist Will Denver. Well, let me start with something one of your colleagues wrote about a week ago. That was, to me, shocking. I thought it would get even more press. The sort of comparing U.S. bonds, a lot of European bonds, to Turkish bonds, and essentially saying, hey, you put your money in there, it's just gone. It's for lack of a better word, almost a worthless investment. It certainly is. The risk is too high. What do you make? I mean, that's a pretty tough thing to say.
Absolutely. So what we've seen so far is I would call it a regular bear market in OECD bonds as a result of way too much issuance. I mean, or you could call it fiscal incontinence, combined with monetary policy tightening, adds up to a really bad supply and demand dynamic. And so you've had a bear market in bonds. Now, the turning Turkish phenomenon is this idea that things could get a lot worse from here, and that's where you have complete loss of confidence in the currency. That's what happened in Turkey. They let inflation get way out of control. They're replacing central bank chiefs every few months. Currency collapses, real assets, equities, gold, go through the roof. And that's what my colleague Charles Gove is worried about and actually thinks is a core scenario. This is what he calls turning Turkish, and in which case you want to be in real assets, not touch bonds or cash.
Right.
I personally think it's a tail risk for now. I think once Powell gets replaced in 2026, the risk is he gets replaced with a political lackey. For now, I personally, and there's a difference of views within GovCal, the firm I work at, on this, I think Powell has given us every reason to think he's credibly targeting 2% inflation. And so that is why the dollar rises whenever inflation goes up. It falls whenever we get a softer inflation number. It's because the market thinks that Powell really is trying to get to 2%. And so I don't think we've turned completely Turkish yet, but it is a tail risk.
Although the FOMC meeting, to your point, Powell did, maybe it was brought up in the Q&A, but he did go to great lengths to say, hey, politics will play no role in the decision-making, but he may end up cutting right before the election.
Right. So if you go and look at election years, back to 1972, which I've done, very often the Fed has hiked rates or cut rates in the months leading up to an election. So they're very capable of doing it. I think Powell, all else equal, would prefer not to change policies right before. But if the inflation data calls for it, I think he will. This time around, I think the base case is the Fed is on hold. And the reason why is we had a very clear disinflationary trend last year, as was shown on my chart earlier. And then in the first 3 months of this year, that reversed, and we had a scare of inflation rebounding.
Right.
That basically reset the clock. The Fed now needs to see at least 3 to 6 months of benign inflation data before it has the confidence to start cutting.
By the way, yeah, we used your charts. They were just fantastic charts, so thank you for lending them to us.
My pleasure.
Let me ask you about consumer demand, right? Net worth and the wealth effect. Because to Kelly's point with this menu down at the Hard Rock Cafe, I don't know if I can recall a time when the bifurcation between the haves and have-nots have been this intense.
Yep.
And what really worries me is that Fed policy is based on the aggregate.
Yep.
And as long as wealthy people have a lot of money, poor people and middle-income people are going to pay high credit card rates, high auto loan rates. It just feels like something is wrong with this formula.
Yeah, absolutely. I mean, I think the monetary policy apparatus is very blunt. I'm actually glad they're not trying to target specific things. I get more concerned when the Fed comes out and says, oh, we're going to try and address climate change. We're going to try and address income inequabrainerd We're going to try and
that gets back to your earlier statement. The next Fed official, I'm on pins and needles because, you know, if it's a Brainerd or someone like that, I just believe we're going to do those things. We're going to target climate change and those things. But it's just a tough circumstance for the average American out there to hear that the economy is booming when their own personal circumstances may not be.
Absolutely. I mean, I've been buying food here recently, and it's shocking.
Okay, well, great stuff, my man.
Hey,
really keep up the great work.
Thank you very much. My pleasure.
You guys are great.